Good morning, traders. It's 8:04 a.m. Chicago time on Tuesday, the 22nd of March, 2022. Please give me a mic check as we get started here. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, this is episode number 2196. There's a fair bit to talk about today. Let's see if this mic holds up. Today. I think it's actually the broadcasting software that's causing these issues. Here's the conversion trading pre-market summary sheet, which is turning a little more risk on. The sentiment is pushing a little more risk on this morning as the S&P and others are starting to push a little bit higher. We've held the indices have held their highs, near highs overnight, and are consistently staying up at these prices, taking back some of what was given up during Fed's Chair Powell's comments yesterday, which caused a pretty precipitous fall in the afternoon when he was talking. So that's where we stand. Again, the sentiment has been neutral to slightly to mildly risk on. As far as key earnings, we have Carnival before the open. We had Carnival before the open, Adobe after the close. Currently, what's on the focus? What's in focus is the Fed is really talking aggressively about rate hikes. We just had Bullard make comments that the real economy is doing very well, that he expects rates to reach neutral. He believes that they need to be more aggressive to curb inflation, and the Fed needs to reach a neutral stance by the end of the year and then reassess. He thinks rate hikes should be done in 50 basis points increments. Well, let me turn on the sound. Yeah, this has been an issue. I need to take some time and dig around with what's going on here. Tech problems. So I turned down the sound a little bit. Should be a little bit better. So that's between what Jeremy Powell said and Fed's Chair Powell said, what Bullard is saying. There's really a synchronized message from the central banks that are basically, in my opinion, trying to spook the market into getting into line, into setting expectations for rate hikes, which they may not want to. They may not want to actually make. So. It's the Fed's role is to manage expectations more so than to manage currency. So that's on deck. Crude supply continues to be at risk. And prices are pushing higher. Crude pushed way over today. And is quite bullish and remains quite bullish. Crude got to $113.35 with a low of 107, which is where we were yesterday. We settled yesterday at 109.97, so basically 110, and opened at 110.91. So crude is back bullish, and it's sitting here unchanged as it dropped pretty quickly a couple of hours ago and is recovering slightly. Again, the low in crude is 107, and we're $3 higher. As far as the calendar, we have ECB's Lagarde speaking in a few minutes here. Construction output out of the Eurozone, nothing dramatic there. We don't have any big numbers, nothing's bolded in the calendar. Fed's Williams at 10:30. Fed's daily at 2 p.m. Eastern. API crude oil stock change. You might want to pay attention to that if you're a crude trader. Fed's Mester tonight. So this is where we stand. Turning our attention to the S&P, quite light volume, 153,000 contracts traded so far. with 20% of the overnight inventory long. So it's relatively balanced. Again, we're coming in with range that's much lower than where it's been for the last couple of weeks at 39 and a half. It's still quite wide. It is wider than what we would call normal over the last 252 days or 1 year of trading as a statistical base. So the range is relatively wide against the history that we're looking back to again, which is 252 RTH sessions, which make up a year. The point of control again in the 44.67 area. What we're seeing today is basically a reset or a redo of yesterday's auction. We are essentially in the same spot, trading the same prices in the S&P as we were yesterday. We had 44.40 as the point of control yesterday, which shifted up a little bit. So the point of control keeps moving higher and higher as the S&P's accepting prices. I want to reiterate and remind everyone that the move last week was really unusual. We essentially gained about 1% per day. And if you look at the rally occurring Tuesday, Wednesday, Thursday, Friday to 5%, we actually gained an average of over 1.3% per day every day last week. And that's highly unusual. So this is consider these circumstances as not normal. A quick look at what was expected yesterday. This is what I drew out on Edge Pro X using the key levels. I talked about 44.10 being the magnet. The session had 44.80 something or 44.90 being the over under, so bullish over, bearish under this lavender line. And the primary expectation is we would push to somewhere around 44.80. So that's the primary expectation. So on a rally, we're looking for 44.80. On a sell-off, we're looking for a push towards 44.10. Here's what actually took place yesterday. Let me switch screens into our review segment. So yesterday we open up in this sort of open auction in a range, and we quizzed you a little bit yesterday about Friday's close and if this looks finished, and many of you answered correctly that the rally looks unfinished, and so the expectation is one way or another there's a very high probability that Friday's high at 44.57, which is the weekly high, is likely to be taken out, and they did. 44.73, we pushed pretty strong right off the open. Remember, I was expecting a push towards 80, but I was expecting it to base before pushing towards 80. Without a base, it's hard to come in, push in an impulse like this. This impulse represents almost a 22-point move, which is well above what we would consider to be impulsive or expected impulsive. So it gets exhausted quickly, and in this case, it got exhausted incredibly quickly and incredibly hard. So instead of pulling back to hold the mid or VWAP or full session mid or full session VWAP, it just basically precipitated right through, giving us a pullback to the mid from below and extending lower, and it started to move towards the that 44.30 area right here. And if you recall, there were some single prints right at 35. There were some single prints there, and that would be the key initial target, and it did get there. It went to 35.50. 35.50 gets put in, then we move back through this ribbon right here, which I talked about yesterday in the Conversion Trading Head Trader channel as a key area for me to look for a short. The idea is that we would scale into a trade in this area between, at the time, this area was between 49.50 and 53. Uh, the normal pattern as we push into this area, we'd look for it to come back, take some scale, take a scale out, and look for it to fail through and get that IB low. I was expecting the IB low to be taken yesterday. That statistic, what is the IB stat? Anybody? What's the IB stat for the ES, and what does it signify? See if you're paying attention. So we're pulling back to a very clear reference here. We've got the open, we've got the opening swing low, we've got the full session VWAP, full session mid, RTH mid, RTH VWAP. We've got prior settle, we've got the prior close in this area. Okay, so normally this is a high probability trade. We're looking for it to turn over, and then we have a high probability target of approximately 97% historical probability that the IB high or the IB low will be breached, not touched, breached. So we want to get out at the IB. So the idea is to get into this trade here in the 49.50 to 54 region, being that it's a wide ribbon or a wide band, we want to scale in. So break up. If it's a 3 lot, we break up into 3 entries, looking to space them a minimum of 1 point apart to drag our average up. That is a planned average in, not a panic average in. And then look for it to relieve and then take off your first lot in the prior consolidation, take off your second lot in the low consolidation right here, and then target the IB. That's the trade. So in this case, we're looking for 35.50 with an average exit of 40 on all 3 lots, entry at about 50. So here we're looking for 10 points of profit for about 3.5 points of risk. So it's a 3-hour trade. This is a good trade to take. But when the market starts walking through, what we want is an impulse pullback push, a weak push that starts to fail. And we're looking for that failure and looking to trade the short side of that failure. That's really what we would want against the stock zone or level, whereas this was consolidate, push, consolidate, push, consolidate, push, as you see here. Consolidation, push, consolidation, push, consolidation, push. So waiting for that weakness to show up, none showed up, and it ended up going past the prior high and sitting sideways. Why am I going through this painful amount of detail? Is because I want to make this actionable. I want to show you what's actually happening and the mechanics of what's going on. The idea, the bias, now that we've tested above and failed below the mid, the bias is short. We have a clear target. We have a clear area to lean against. These day generated and prior session generated levels, a stack of them. This is a trade to take. All we have to do now is wait for the setup, and the setup is failure for buyers to keep going or for somebody to come in and iceberg sell and cap the selling. And then we're looking to hit the bid and wait for the rotation with a fixed stop. So that failed. And then Powell, our friend Fed's Chair Powell, comes in, and we get this move from approximately 63, the SOC being 63 here, move down, and then we finally get a decent pullback to short. It did poke the IB, so it did do the IB stat, but it had clear failure up here. There was a bit of an iceberg up here, and then it continued through, and then the next target will be what? The 10. The 10. It did not quite get the 10 yesterday. It got to 15, I believe. The low of the session was 44.15 even, and once it broke through the IB here, the trade was done. Multi-distribution profile yesterday, active price discovery. There was really no balance yesterday. We trampled on the overnight high as well as the overnight low. We had a normal variation down day with a close in the middle. We ended up closing yesterday right on top of and almost at the same price as the prior day. So the prior settle ended up being the current settle. We missed it by a couple ticks. So the market overall tested above, check. Tested into the prior range, into this low volume node right here, check. Market finishes right where it finished on Friday, check. This here constitutes what? It constitutes a successful test. For sellers, found them. For buyers, found them. Finish where we are. The expectation is continued drift. Okay? Continued drift in the direction that we came from. Essentially, this becomes a bull flag. And so that's what we have in the overnight session. We open up, well, we have the spike here, and then we open up. Let me get rid of the profiles for a second. So we have the spike here. We open up and we are holding right against yesterday's initial bounce high, right against the initial bounce high up here. So the overnight high 72.50, the prior day's high and the initial bounce high is 73, and it's not giving up any territory. This is looking unfinished again to 44.80, and we are likely to aim for the key resistance up here at 4,500. 44.96, 4,500 is the next key test area as evidenced by the stock zones. So if you look at the stock zones, you'll see that our key resistance is right up here at 44.96 or so. That is the next really important balance area. So that's where we stand. The over-under price is right here at 51. Above 51, we're looking bullish. Below 52, we're looking for a retest of the magnet down here at 44.10, 44.1175, really. So that's the lay of the land. That's your review. Let's take a look at the overall picture of what's taking place. So this is our TPO chart here. We made this rundown for the low. We've bounced back up. We've put in a higher low right here. We've put in an even higher low with a double TPO low. This is marked as a double TPO low here. And what we have is profiles that are accepting prices higher and higher and higher and higher. Okay, so this is a market that is accepting these prices higher, but don't get caught up in this because the risk overhang is still quite substantial across the indices. The fact that the taper continues, the rate hikes continue, the rate hikes are a substantial headwind for equities, especially techs. And a substantial tailwind or helper for the banks. So if you look at your heat map today, your pre-opening heat map following, well, even if we looked at yesterday's heat map, let's pull that up. Here we go. Let's throw that on here. If you look at the heat map from yesterday, you'll see that energies, of course, are benefiting, right? And the banks are definitely benefiting. The banks are, they look like a mishmash right now, but overall, the banks are doing well. Schwab and others are pushing higher, and they're very healthy, and that's because they're the ones benefiting from the increased interest rates. So those are, the banks are a what percent component of the S&P? Does anybody recall what percent component of the S&P banks are? Maybe you should look that up. So that's the overview. That's the TPO chart. The overview is we keep maintaining separation from our VWAP. Okay, and that VWAP becomes a target once the market rolls over. Am I expecting the market to roll over? Yes, I expect us to push into 44.80 consolidate, then get to 44.96, battle it out, and I expect us to fail from 44.96 and start to pull back into the 4,300 handle. I'm seeing this overall as a pullback rather than a new rally that is taking place. Okay, so let's take a look for a moment at what we're expecting for today. Just setting up the chart. A lot to handle here. Okay, so here's what's expected. Banks may be 12%, but financials are higher. They're in the 22% range, something like that. So here we are. We're opening right here. We are opening above VWAP and mid. We're opening on top of the overnight point of control. We have a double distribution profile with this over underline right underneath us. So we have this 44.51 area that is really important. So the expectation this morning is an open auction that pushes into that 78.80 area. So this is 78.80 right here, and I'm expecting it to actually come back and then move below the 51 to 54 right here, move below and then consolidate in this area to form a base. The pushes up were confronted by selling yesterday. That in part is due to Powell, but you saw well before Powell came in at the very early portion of the day, you saw the push to 73 really bring in sellers, and I'm expecting the same. We're moving the line up the field a little bit, up the scale, up the price scale a little bit, but I'm seeing great opportunity for sellers up here to step in. If we test down into the 51.54 early, as in scenario 2, and we come back into the overnight point of control, the 51.54 being supported by the full session VWAP and full session mid, we come back into the overnight point of control, we are likely to climb into 78.80, and that gives us a good base to test into the 96 here and poke this 96 and 00 area, which is the key resistance. That'll be scenario 2, most likely falling off by the end of the session. Okay. The important thing to take away here is the logic behind how we got here and how we formed the bias. This has gone long. I know I started late, but hopefully you're picking up the pieces here and coming up with your own plan, because at the end of the day, when you click, you got to trade your own ideas, not someone else's. So make sure you have your price map, make sure you have your process, make sure you know what you're looking for in terms of how to engage and how to manage your trades. I prefer a strategy when managing a trade, just preset stops and exits, and then just take your hand off the mouse and let the market do what it needs to do. Again, make sure that you have a plan before you trade. If you have not done so, find the YouTube button and hit subscribe and the alerts and the thumbs up feature on there, and you'll get notified every time a new video or a new live stream is created. I intend to do more and more public impromptus going forward, and this will give you a chance to get an alert, because there is no other way for me to alert you to participate. Good luck.